Welcome to the channel. I'm Clayton Morris, longtime investor, and today we're going to dive into two of the most popular investment vehicles, real estate and the stock market. Which one is better for you? And this is going to be individualized and really depends on your goals and your preferences and much more, to be honest. You may already have a stock-based investment plan, a 401k plan, and you understand the concept, right? If you've got a 401k or an IRA, then you're already investing in the stock market. Maybe you're doing it passively. Maybe your employer set it up for you and you don't even know what's in there. But for those of you that don't have a full understanding of how stocks work, here's a simple and brief explanation. A stock is simply a security, and it represents ownership in a piece of a company or share of a company. It's basically a paper asset. And as Robert Kiyosaki, the author of Rich Dad, Poor Dad, likes to say, it's like basically owning air. So when an investor owns shares in a company, they will have financial gains and losses that correspond to how the company performs. Coca-Cola goes up, your stock and share price goes up and rises. It goes down, your stock and share price goes down. Individuals can also invest in a bundle of stocks for diversification with what is known as an ETF, an exchange-traded fund, as well as a mutual fund. When I was starting out in the investing world, ETFs were all the rage. That was one of the things that I was heavily invested in at the time. And when I really started out early in my employee life, when I was working for somebody else, a mutual fund is what I heavily invested in at the time. Now, on the other hand, let's talk about real estate. Specifically, a buy and hold real estate strategy that involves buying rental properties. Now, a property manager is often put in place to take care of everything moving forward. A tenant rents out the property manager is going to screen the tenant. They're going to do a background check on the tenant. They're going to place the tenant. They're going to sign the paperwork and lease agreement for the tenant. All of that we handle with a property management company. Now, you might be thinking, is this something I would have to do on my own? And sure, you could do it on your own. I would never recommend that. That's why we use property management teams to do that after you own a rental property. Now, once the tenant is in place, the investor then receives a rent check every month, like clockwork. They hold on to this property with the intention of keeping it for years to come. The properties that I own, I don't ever plan on selling. Typically, more properties than are purchased and added to your portfolio over the years. The real estate investor then has several properties in his or her portfolio with multiple streams of income coming in every month in different markets, different towns. So you have this diversification. So now let's go deeper into the pros and cons of this process and of each strategy here. So the pros of investing in stocks. It's easy. I mean, as you've seen from Robinhood, right? And you've seen from these other television commercials, you can open up an account in minutes, you can get some free stock, and you're in, right? Easy, super easy to get in. Even your grandmother can do it. And then, of course, on top of that, there's potential to grow your money, right? You invest in Tesla, you hope that it goes over $700, which it just did, but then it also just went down to $675. And so you go back and forth, but there is this potential for that company to go to $1,000, right? So you grow with that company. It's also easy to diversify with a variety of stocks. So you can choose stocks that provide dividends, right? Which provide a little bit of cash flow for you. And those are nice. Like if you're in an AT&T stock, you might get a 4% return on that investment over time. And that's great. But you can be in a variety of different sectors as well. Big technology companies like Apple and Google. You could be in large companies that have been around for 100 years, like Ford, that's going to be there probably for another 100 years. Or you could invest in sort of newer stocks that have all the rage right now, like GameStop or AMC or Uber or any variety of new meme stocks that are going around. And those can be fun too. Now, the cons of investing in the stock market long term is that it's highly volatile and it's high risk. Every day, you have entire business networks that are devoted to the volatility. And what is the Federal Reserve doing? Are they going to continue buying up all of these bonds so that Wall Street continues to go up? And it's crazy. Every day, whole shows are devoted to the volatility of the market. Swings back and forth. You could have 4 days of red, then 1 day of green, then another 4 days of red. It can be very time consuming to study all of these companies. Jim Cramer, you may know him as the host of Mad Money on CNBC. He wrote a number of books a few years ago, and one of them, in Mad Money, he said you should never invest in a company like Coca-Cola, Apple, or otherwise, unless you have 10 hours a week that you can devote to studying that company. That's a lot. Do you study the stocks you invest in for at least 10 hours a week? Next on the list is no control. You hand over your money to a broker. You invest in a company like Coca-Cola, for instance, right? And then Cristiano Ronaldo, one of the greatest soccer players in the world, sits down at a press conference during the Euro Cup finals and grabs the Coca-Cola that's placed in front of him and moves it off to the side. And he says, no, agua. He wants water. And Coca-Cola's stock takes a dump as a result of it. $8 billion a market cap down the toilet because Ronaldo moved a Coke out of the way and put water in its place. You have no control over that. By the way, Ronaldo was right. Water. Anyway, let's talk about the pros of real estate investing. Now, you have steady, consistent cash flow, month after month after month, especially in a market like we're in now, which is incredible demand. We are in a housing crisis in the United States. And what I mean by that is we need 20 million houses to be built, and we don't have enough of them. There is absolute demand and a waiting list for tenants on properties. We build new construction properties, so we have tenants that are waiting to move in once our new construction properties are completed. And so you should have a very low vacancy rate. So if a tenant moves out, you can do a quick tenant turnover with your property management team. Could be a week or two to get the carpets clean, paint, touch up, etc. And then a new tenant should be ready to move in. So steady, consistent cash flow, which is different than the stock market. You're not getting cash flow unless you're totally invested in dividend stocks. The next piece of this is that if you invest in the right markets, they're largely recession resistant. In fact, some of the markets that we invest in and build our properties are located in recession resistant, or as CNBC called some of our markets, recession proof. Why? Because they're not flashy. They're not in Las Vegas. They're not in Miami, where you're given to these crazy bubbles and tourism and anything else. You know, when Las Vegas got the pandemic hit, the entire town shut down and people lost their jobs and casinos shut down. Well, I don't invest there. I invest in high job growth markets with a diversity of businesses that are moving to those areas, which are relatively boring towns, but they are great places to live and work. And so they're not flashy like San Francisco or Vegas, but they are largely recession proof, which in many towns across the United States is the case. Next on my list is the tax benefits are unmatched. I would literally get in a ring with anyone that thinks that they can outmatch me on tax benefits of owning real estate. No other asset class, no other investment even comes close. You might be able to argue that raw land as an investment, still real estate, raw land might be close to owning property that cash flows, a structure on the land. But still, I will beat you in a head-to-head matchup. You do not get the tax benefits that I get through depreciation of those assets. I can write off multiple things on my taxes because of real estate. You can't do that with stocks. Next, the cons of real estate investing. There are a few. If you're new, it can be easy to make costly mistakes without the right team in place. Like if you try to go out there and do it on your own, you buy a house in the wrong market, you hire the wrong property management company, they place the wrong tenant in the property. Yes, that has happened. People can do that, and you can make mistakes. Next, some investors may not want to invest in out-of-state properties. Every property I own, I never see them. They are thousands of miles away from where I live, and I don't care to ever see them. In my opinion, it's like owning a stock, if you think about it, right? I don't care to see those properties, ever. I've got a great team that's managing them. Why do I need to see that property? But for some people, that might make them uncomfortable. And that might be a reason why you would avoid real estate investing. To which, though, I would say to you, of the stocks that you own in your stock portfolio, do you ever drive to the company's headquarters of the stocks you own? Hey, I'm here at the Ford headquarters. I'm just checking. I own 5 shares of your company. I just want to, you guys still making cars here? Because I'm an investor. It also might not just be right for your personality type. You need to see my full video on the 5 downfalls of full service real estate for more info on that, because it might not be a good personality fit for you. Now, I've invested in both, and I have to tell you that I personally prefer investing in real estate. However, it's not right for everybody, and it's important that you do some soul searching before you determine what's right for you. Now, for more info, check out my full blog post on this. We have a full blog post that we wrote up on this, as well as the next video on how to create your personalized path to financial freedom. Check out that full video right here and the card, and we'll see you next time, everyone.